like almost completely flat. That's nice.
It's good weather, man. That is good weather. Okay, we're live.
All right. Alrighty.
Okay. Hello, Asga. Let's hope the links are getting sent.
What were we looking at last week? We were looking at the
Gold. We looked at
we we,
gold.
we were yeah, we were looking at the gold, and it did do a significant bounce when we were looking at that repeated 4-hour trade.
When we said we wouldn't take it.
It kind of did go a bit in the opposite direction.
Yeah, it did. It did. What else did we look at though? Let's look at, BTC is a good place to start, right? BTC is always a good place to start. All right, we got the people. They're here. Hello, Björn. Manny, what's going on? Nico, how you doing? Björn saying hello to us both. Hey, Warren, how are you, mate? Good to see you. As you come in, guys, make sure to give the video a like. Give the video a like as you enter the stream, guys. Don't forget to do that. Hey, Michael, good to see you again, man. Good to see you. All right, guys. Great to see you all here.
So I kind of been building like a thesis for just like just where markets general are gonna go in the near future. Now, I'm not saying this is accurate or correct or anything, but generally speaking, war, like wars happening across the planet is generally bullish for markets. Like it tends to move the markets in a direction of upwards.
Yes.
And there's a lot of people generating money on wars. I can't help but see these pictures out of Afghanistan and hearing the operations come to an end after 20 years. Whether successful or not doesn't really matter. What I'm looking at is that I'm looking at business being over, like business just being discontinued, at least for now.
Yep.
At least for now. I'm sure there will be new business somewhere else, but at least temporarily it just looks like a little bit of weakness in the market, and it looks like a little bit of, I don't know. It's I think we have a good chance of seeing like a macro pullback from here. Just not like the sort of bearish scenarios that people were talking of before COVID, where they're talking about like multi-year bear run where markets just gonna be dead. I don't think that's the case anymore. I think it's been actively demonstrated by the Federal Reserve and the monetary policies across the world that even if there is a pullback, and even if it's a very, very steep pullback, I think generally it will just be handled the exact same way that it was handled this time, maybe in a bigger proportion or a small proportion of creating money, literally injecting liquidity into the market. So
yeah, for sure.
I'm not starting to short here. I'm not like, oh, the market is an uptrend and I think it's gonna start to go down, I'm gonna go short. That's not how I operate. It's not how I operate. The way I like to think about this is that I'm looking at SPX just like you're looking at here, Tom. And I'm just starting to think like, okay, well, if we are looking at some sort of pullback, well, what is that going to do for these different markets? Like, what are we talking about here? And what sort of levels am I looking to buy? How am I looking to position myself? Those are the thoughts that I make.
Yep.
In general, we're looking here at one day time frame, SPX 500. In an uptrending market, it has now touched extension 1. But if you if you pay attention to that extension 1, it actually never gave like a significant rejection exactly from the level. It was a little bit higher before it came in, but now it's unfolding.
Yes. Yeah.
Maybe you can zoom in a little bit, Tom. Right. So I think it's it's very reasonable to assume this is going to retest that R level, that 37, 70, 43, 75 level. Yeah. I think there's a very good chance it's going to happen. Now the question is, should you buy this level? Well, that's the thing. That's it's still a resistance, you know. Like the strategy, our strategy mode would not suggest a trade here. If you go to 4 hour, you will probably put up a trade. Should you will you make money in that trade? Yes, probably. But is it gonna hit TPs? I'm not so sure about that. I think there's a potential here. This might actually drill significantly down all the way to like 40.62. Not that that's significant down. It's just a pullback. Yeah, actually below that even, Tom. I'm talking all the way down. Like we're talking about like some sort of sell-off event here. If this thesis of you know, just general max perspective just turning a little bit bearish, it's nothing more than that. And the you know before we had the COVID crash event, people were like speculating in this massive crashes, and I also entertained this idea for some time. I'm not gonna lie about that. But back then it was a different idea people had of these when they were talking about like the end of stocks and like the big crash. They were talking about like the big crash. But because back then we didn't know what sort of extent that global policies makers would go to in order to keep these markets alive. And we have now seen what sort of extent they're willing to go to keep it afloat. And I'm now I'm now convinced that it's like any sort of pullback in any sort of indice like SPX 500 is a buy. It's just a question of where should it be a buy.
Yeah, for sure.
And that's the question.
That's always the question, right, mate?
That is the question.
That's always the question. For sure. Yeah, no, I completely agree with you from a like fiscal and monetary policy perspective. I don't think interest rates are even negative yet in the US, right?
Oh,
so,
no,
you know,
no, they can go.
Plenty of room to move. Plenty of room. Plenty of room to move.
Not even
not even negative yet.
Yeah.
Yeah, I mean, you know what? Germany, negative interest rates. There's negative
Denmark as well.
Denmark, negative interest rates. Yeah, like,
yes.
you know, cash rate being negative, right? Even some mortgages and things like that are negative, right? You can be paid to get a loan in Denmark. In Denmark. Yeah. So crazy, man. Plenty of room to move. Lots of room. Lots of room. Yeah, zero is not the floor anymore. All right, guys. So get in your questions for today. If you've got any questions, any new traders that are new to Breakfree Trading, if you have questions for us, please get them into the chat here. We'll get through, we'll answer them. Otherwise, we'll just be talking about whatever we're seeing here in the markets, talking about, you know, maybe some trades here and there, talking about just whatever we have on our minds, basically. But please get in questions so that we can answer them. This is your best opportunity in the week to ask us questions directly. Cool. Alrighty then. Let's take a look at pound US dollar. Okay, we got a question. I know it's a repeated trade, but it would be a second retracement of the level. RTD is looking great, and the recent price action that level shows an engulfing candle back through the level. I guess Björn's talking about the S&P 500 we were just looking at there. But I've had some questions about repeated trades, Asker. Some repeated trade questions, because I've noticed, right, that markets have kind of been retesting over the past few weeks, like we can see here on like pound US dollar, this similar price action where we're retesting kind of some key levels over and over again. And we've got some questions in the community about how do we identify these repeated trades, basically. So I think we can probably go through something like that, you know. First of all, how to identify them, why it's important to identify them, you know, why we don't want to trade around these levels that keep getting just like banged into over and over and over again. So, you know, a good example here straight away is pound US dollar. Okay, you can see it's a repeated trade when we draw this box around our level here. Okay, so we draw a box around the level. This is something I go to kind of all the time. Maybe it goes back to the early days of BFT, drawing lines around our entries. I'm not sure, but I kind of just always do this, right? And it's really helpful for identifying these repeated trades because I can see how the price has interacted with this level, you know, in the past. All right, this is really good from a price action perspective, being able to see that price action and to be able to see when trades are repeated. And what I can see here is the market move below this level here, right? Come back, retest it, continue on, take TPs. You know, you might even want to draw another box here around like your TP1, for example, to see when TPs have been taken, right? So the market pushes through the level, comes in, tests it, moves down, takes some profit, all right? So that would be 1. Moves back up, catches maybe entry 1, perhaps entry 2, moves back down, takes more profit, that's entry 2. Moves back up, moves back down, that's number 3, and this would be number 4 if we moved back into this level here. Okay, so this is the easiest way to go and look for repeated trades. Now, the reasons why we don't want to take these repeated trades, okay, why we try to stay away from these when we're looking at these trades and we see something like this happening where this level just gets banged and repeated over and over and over again. Number 1 is from an RTD perspective, you can see how it's really collapsing here, okay? So this trend, when we were, you know, down at this point here and we're coming back for that next retest, or when we were in here somewhere and we were coming in for the second test of the level, you know, we were still in a really strong downtrend. We had a very thick global. We had the local well and truly below the global, quite thick as well. So, you know, we knew that this was a really strong trend, a well-established move in the market. Okay, but as we continue to retest this level over and over and over again, it looks less like a trending market and more like a ranging market. And one of the key things, you know, as you mature as a trader is to know when to not be trading in a certain market, right? To know when to stay out of a market, just as much and more importantly, actually, than when to be in a market. Okay, so now this becomes more and more and more of a sideways move, you know, a market that's ranging rather than trending. And then on top of that, right, you've got to imagine like this is a pool of liquidity in here, okay? We've got a bunch of sellers in here, a bunch of people that are prepared to sell at this point and basically make us a winner, because you've got to remember that we can't make ourselves winners in markets, all right? We can't make ourselves winners. We need other people to come into the market with the same ideas as us to make us winners, right? So as this level gets basically attacked by the bulls over and over and over again, the bears there's less bears there. There's less willing sellers in at this level to continue to knock the price down over and over and over again. So you can imagine it like, you know, you're hitting a piece of glass, right? You're just constantly punching a piece of glass over and over and over again. Eventually that piece of glass breaks. Maybe you can hit it a few times, but eventually it breaks and you get a bloody hand when you punch through that glass. All right, so think of it in the exact same way. This is why we don't want to take trades that have repeated over and over again, and just simply drawing the box around and very simply recording in your mind how many times would this have moved out of that level and taken TPs. 1, 2, 3 already. If the market moves back up there, that would be a 4th touch. All right, that's what we want to think about when we're looking for repeated trades in a market. All right. Hey, everyone. Would you agree on this? Scroll up, please. Hello, Tom. A big hello to all BFT members. Hello there. I haven't seen your name before. Welcome to the stream. I've noticed sometimes the Sonar gives you some trades that TradeGuard flags as they're trading against the local trend. What do you think of that? You can... what do you think of that? You can see example on 4-hour New Zealand dollar CAD now. Okay, cool. So, you know, on these high... oh, that's one day. Oh, still the same example. Still the same example. In general, this isn't really an ideal trade that I would take, but I'll use the example for what it is anyway. You can see how many times it's been repeated. When I draw my box, I immediately see how many times this level has been tested, and soon there's the potential that the buyers no longer step in at this level again. All right, so I wouldn't be taking this trade immediately. It doesn't really interest me a lot. I'm probably going and finding something else. But to answer your question here, with the local against the global, sometimes, you just have to have the local against the global to find entries on these 1 day and 4 hour timeframes. Because we've got to remember, right, when we're trading with a strong trend, we need a deviation away from that overall trend to get our entries. Okay, we're trading deviations away from the mean for then a reversion back to the overall mean again. Okay, and if we see one of these deviations, right, this is exactly what we want to see. And in many cases, we're going to have the short-term momentum going against the overall macro trend in that short-term deviation. So if you're getting presented a trade like this by the sonar, it's being presented to you for a reason, right? It's being presented to you for a reason. It's because the trend is reasonable for you to buy it in. That doesn't mean you go and buy every sonar trade. That doesn't mean you go and sell on every sonar trade. It means that you have an objective look at what does the trend look like, what does the level look like compared to everything else that I have available to me. All this other stuff that I've got available to me, is this the best place for me to deploy my capital? If the answer is no, then you don't take that trade. You go and deploy your capital somewhere else where it's going to be working better for you. You've got to imagine your capital like these little soldiers that you're sending out into the battlefield, right? And they're going to, fight your battles for you, and they're going to expand and multiply, okay? And are you willing to risk your soldiers in this fight? Are you willing to risk your soldiers in this battle? Or is there a battle somewhere else where objectively you've got a much better chance of those soldiers coming back stronger than they were before, returning to you, and also bringing back with them, more soldiers for you to go and trade with again? Okay, this is the way that, and you use the RTD and the levels and the price action in order to determine that. But yeah, usually, to answer your question, you're going to have the local against the global on these higher time frames if you're trading around these key levels on the 1 day and 4 hour time frames. All right.
We have a question from Eugene about XAU USD gold. Eugene, can you just put in where's your stop loss? And let's go have a look at gold. Yeah.
Just put in the chat. USD. What does Eugene say here? XAU USD, 4 hour and 1 hour maybe thoughts, entered short on sonar, stuck for days, close to stop loss level. How should you analyze these kinds of setups? Don't mind losing it, just interested in analysis.
So okay. we actually went over this last week, and I'm gonna repeat it again because it just doesn't make sense. And it looks wacky, and you think this is like it's naughty. 1822. Okay, I think that's a very safe stop loss. Now okay, so gold here. Now what I told you guys last week about the gold setup is that initially on the Monday dump, when we woke up and gold dumped into that 1687 territory, it immediately gave a short at 1750, and I know Tom took that trade and it worked out very well. Mm-hmm. And then it started consolidating. Below and came back up pretty soon again. And that's when we talked about in the live stream, and I said I would probably not take the trade this time. And how do you know that? Like how can you actually know that? Well, that is difficult to know. That's not something you're just gonna know. The reason that I know this is because typically in markets, when you have a big unexpected clearing event like this that happens on gold on a Monday before the rest of the world is even awake, where it's just taking out so many, it's just taking out all the stops that's possible to be taken out in that range, and it just starts a cascade. The stops becomes the sells. It's not that people want to sell. no one is like shorting 1687 trying to get 1500. That's not what's happening. What's happening is that it's a rolling liquidation event. It's a cascade event that the people selling are selling to people who has their stop loss, and then it just keeps going all the way down until it's all cleared, right? So once you have cleared all of those stops, well, you're actually kind of killing the momentum for immediately continuous movement in that direction, meaning that you should not, after you have such a big movement down, you should not expect it to just immediately continue. In fact, you should expect it to go the opposite direction. And the reason for this is because that's just how markets tend to do it. People tend to, it has taken out all the stops, meaning that the max pain scenario for how, how, if you're looking from this from a market maker perspective, like a people, just say you're assuming one guy is controlling the market. Well, if you already have taken out all the stop losses that was going to drive the price down in the direction of gold, you should really expect it to then take the opposite direction, because then if there's no more stops to be taken, well, then there's only one other kind of stops to be taken, and those are the short stops. So that's where you typically started to see it to like do like a mean reversion upwards. And now we are kind of at this point with gold where you might wonder, is it going to continue down from here? Is it going to continue up from here? I actually think that this was about it, what we saw for gold. Like I think it will most likely sorry, it will most likely next week just continue downwards. It's going to consolidate most likely a little bit more this week, and then next week it's going to continue its schedule of moving downwards. That's what I think. It's going to create a new range here, and that you basically have a new top and a new high, and it's going to trade between that. I don't think it's going to immediately go further down from here, like create new lows, meaning go lower than it went last time. So if you are in a trade from that neutral level at 1750, I think you have a very good chance of getting out a break even in the next week, or if not the week coming after. I would definitely, if I was in a short position from 1750, I would most definitely get out a break even on this trade, simply because of how long this trade has been sitting in drawdown since that short position in 1750. So these are my thoughts.
Yeah, for sure. And I guess, when you're looking at this type of trade, when it's coming into the entry here and you notice you've just had price literally at that entry before, it consolidates a little bit here, and then it's kind of just like moving straight away again back up to bump straight into this entry again, right? Immediately you're kind of thinking, okay, it's a repeated trade first of all. It's not a fresh touch. It's not, the first possible entry here. And the market just wants to move it back up again. This is something that you're immediately, a little bit skeptical of that level straight away. You're really, immediately skeptical. Just similar to, we were just looking at, what was it? NZD CAD, I think. This price action here, if you just look at this like little block of price action right there, where that level was it was touched and then it moved up and then it just immediately rips back down into that level again. It's kind of like, well, why is it just dumping back down? It came back too fast into this level. Like, okay, first touch, yes, sweet, awesome. Like, this is great. This is exactly what I want to see. Break, retest, continuation to the upside. Second time, okay, maybe it was, who knows? Maybe it got lucky. I don't know. But then the third time, it's kind of like, okay, wait, we're just ripping so fast down into this level. And this block of price action right here, this structure of price action almost looks identical to the structure of the price action on XAU USD when we look at that same,
just opposite. It's just opposite.
Yeah, just opposite. It's just flipped over. But if you look at it, in terms of the structure flipped around, this same structural piece of price action right there is just flip it over in your mind, and it's the same thing that you're seeing on NZD CAD right there. Yeah.
So price, the market, like the price of the market generally tends to, move towards the direction of liquidity. Okay, so when you have an imbalance like that happens here, like on a Monday when no one is awake and it just flushes out everyone, it is very common, especially in forex markets. Like especially in forex, I've seen it much more in forex markets than any other markets. Especially in forex market, it will take the opposite direction, and it will go that for quite some time before it starts to move down. And that is just a function of churning out early shorts, churning out people who are just over leveraging and just just market balance in general.
Yeah.
Um,
Well, it happens in stocks a lot as well, Asger. When you have the gaps in stocks, the gaps get filled, and then the market continues on in the direction of the gap, kind of thing.
yeah,
It's
it's the
a
same idea.
similar concept, right?
Hmm. Absolutely.
Um, all right, cool. So that's Eugene. Curious about NZD CAD RTD sideways. Did we just talk about NZD CAD before? I believe
We
we did.
did.
Yeah, we did.
We
Okay,
did.
cool. We got that one already. Awesome. Um, I'm seeing Dotton saying something about like on low time frames such as 15 minutes or 10 minutes, but I don't know what the question's related to. Dotton, if you could put your question into the chat again, I don't know what that question's related to. Hey guys, just curious, is local RTD based off of candle formation? Would love to know how the RTD dynamic. It's revolutionary. Yeah, it is revolutionary. It's great tech, absolutely. When you're looking at indicators and the RTD being, a momentum and a trend indicator, it's all based on price action. It's all based on how the candles are forming at the end of the day. The local RTD is very simply, linked to the 1 day time frame, a indication of the short-term momentum on the 1 day time frame, and the global RTD is an indication of the macro overall trend on the 1 day time frame. Okay, so that's how to think about the RTD. Do you have anything to add there?
It works. It works really good. The more the more I have integrated in my trading and given it respect, the better it has been for me, because I
Mm.
haven't found a single point where I really been able to say like it was just wrong. Because sorry, in general, it's just not wrong, because it's not trying to tell you what the market is going to do. It's telling you what the market is currently doing and what it's been doing
Yes.
in the past. And that's why it works so well, because it's not a lot of people that I know have tried to do different kind of trends indicator in the past, and it always comes down to some sort of trend strategy where they are like, oh, when this crosses above here, then I go long, and it's just a bad approach. Our approach is much more sound, and it works really, really well. And our approach is that it's RTD, is telling you the direction of the wind. Where's the wind blowing and how is it blowing? The same way, you have like sensors and windmills that's like measuring the wind. But it doesn't try to tell us what the market is going to do. It just tells us like what is the market in its current position, right? And based on what the market is doing in its current position, we can put that together with the levels that XMO provide us. And then we can pretty easily tell whether we are interested in buying or selling this market at specific given levels. This gives us the ability to operate on a professional level as traders that very few people even do. And this is the powerful stuff about Breakfree Trading, because we are in a position where we at any given time, no matter how the market is really trading and showing, we can build scenarios for when that the market has fulfilled our criteria to trade. Not that we fulfill the market criteria to trade, but when the market is behaving like we want it to. And when this happens, it gives us confidence in our trades. It gives us the ability to execute these trades and stay in the trades and milk these trades for the maximum amount of profit. And we come a very far way with Breakfree Trading at this point. You might not recognize at this point like how much it's actually doing for you, but trust me, it's doing a lot for you.
Mm-hmm. Yeah, these theses that just kind of get printed onto your chart and just put in front of you. It's like, most traders out there don't go into trading with this type of level of detail in their thesis. Sometimes traders they know where they kind of want to enter, they kind of know where their stop loss is, but maybe they just are really deficient in putting sound TPs. And because they don't have like set take profits, they end up, just going, oh, well, it's going to continue, it's going to keep going. And then it completely reverses on them and they never took any profit. You know what I mean? And this is a function of just not having a clear thesis about what they're going to do in a trade before they enter it in the first place. And I think this is really, really powerful stuff, having that, just literally at your
Just
fingertips to just be able to look and
yeah.
see, this is the thesis that this is my thesis immediately. Just print it on the chart, as simple as that right there. It's kind of like, That's my thesis. I don't need to question where I'm going to get out. I don't need to question where I'm going to get out for profit. I don't need to question where I'm going to get out if I'm wrong. I literally just have my thesis right there on the chart. And yes, as you progress as a trader, you can optimize these things. You can get a little bit more fancy
Yeah,
with
you'll
it and
get
all
better.
that kind of
You'll
stuff,
get you'll get better for sure.
You'll
It
get better
comes.
for
It
sure, but
just give it time. It's like cooking. It's just like cooking. Like you just
yes.
learn, and your food comes out and it tastes better, and you learn to salt it better. You learn to use butter in a better way, and it's just you learn not to burn butter, And that's something that doesn't make sense. We got some questions, Tom, on USD CAD 4 hour. What's the thoughts on USD CAD 4 hour phone? This is a question from Loga.
Loga, USD CAD. Let's look Loga at USD CAD. Okay, USD CAD 4-hour time frame. Let's jump into it. Okay, immediately my eyes immediately go to the RTD, and I see we're in an average uptrend. Okay, cool. We don't have a strategy trade here. Where is he saying? Where's Logo?
No, that's no. It's just these are just our thoughts. So what's your
just
thoughts?
Our thoughts. Okay, cool. Well, I see market structure around here. I see 75% alignment level around here.
I would buy that.
I would buy this as well. I would buy the shit out of this. If I saw a test of this level here, I'm buying it probably up to, where's my arrow? There.
Where would you put your stop loss? Where would you put the stop loss, Tom?
Probably below
that. Oh, look at that.
Structure right there.
Like a perfect stop loss. How convenient.
How convenient, right, yeah. That's probably my trade.
We put so much work into these tools and preparing them for you and giving them the absolute best possibility of you succeeding as a trader. And this is a great scenario of it. It's like, okay, well, where do we buy? And you get the levels, and these are fucking great levels. So you buy here, and then it's like, next question is, okay, well, I buy here. Where do I put my stop loss? And then you take the risk reward tool, the planning tool, tool position tool, whatever you want to use it. You put it on, and you put your TP2 at the neutral level, and bam. Just like that, you have a perfect stop loss, exactly where it should be, which is right below the which is right below the support level.
Yep.
So this is perfect. It's very easy to use. Okay, let's continue. We got some. I think we're gonna get a lot of questions today, Tom. So let's continue this.
Let's keep going. Can you please speak about offset? How to calculate basis points? Basis points is a percentage number, right? So basis points, bips, 0.01%. is 1 basis point. So that's what a basis point is. With XAU USD trade, is this similar to XAG USD on the 1 day? It seems to be consolidating more compared to XAU USD. Okay, let's have a look at them both side by side.
We need 1 day time frame, it seems.
Okay. 1 day.
Oh, fuck. So you can just see right here how much more shit that silver is looking. It's looking really fucking bad. That's what I can tell you. And why is it looking bad? Because it didn't produce any sort of bounce.
Yeah.
While the main leader of metals just fucking bounced very heavily. So so what does that mean? It means once that gold does turn its head, once XAU USD does start moving down, you can expect silver XAG USD to move down much harder. So if we really want to be short, what do we want to be short?
For sure in silver, right? We absolutely want to be short in silver. This is looks like a really great position to take, right? You can, I mean, immediately, right? Just if you're looking at this objectively, let's say you know nothing about price action. These are just like random lines on a chart that you're seeing. Like that's the level of trading that you're at right now, okay? Immediately, just from a completely objective perspective, you can see one, RTD, 58,171. Objectively, immediately, I know silver looks much weaker than gold if I'm just simply looking at the numbers on RTD, right? And then number two, let's say I know a little bit more, I start to look at X mode, I can see I'm at 100% alignment level here, which is at a key psychological point of $25 on silver, all right? $25 has just been repeatedly tested here, right? It is the market cares about $25 in silver right now, okay? We know that for sure. So I can just objectively look at this straight away and go, okay, cool. I'm just going to get rid of this and I'm going to worry about silver. I'm not even going to think twice about gold. I'm not going to even deploy my capital on gold because I want to deploy it on silver if I'm looking at metal exposure. All right. Very easy to objectively decide what to trade using those tools. What's the best time frame to trade NAS 100?
Okay. So let's talk about this.
Yeah, you go for
it. So Samuel, you're probably like a scalper, like low time frame trading. Let's go have a look at NAS 100, Tom.
Yeah.
So the question is, what is the best time frame to trade NAS 100? Well, that's very difficult to answer. It really depends on you as a trader. But if we're talking about what is the best time frame to practice on, what is the best time frame to learn from, because that's really what you should be asking yourself. I understand we're here to extract money from the market, but engaging in low time frame scalping on indices like the Nasdaq, the NAS 100, the SPX, and so on, whatever it is, when you're doing this, you have to understand. You should really see it as like a point of practice, like something you're learning from, and you should not try to expect that this is where that's really going to make you rich right now, because it's not going to do that. Before you get rich from these markets and trading them on low time frames, there's an enormous learning curve to doing this. Even though we provide you incredible, powerful, and sophisticated tools like X mode that tells you exactly where you should buy and what to TP, and in general how to build your trade, the problem is that you, as a human, you need to execute it. Like, you actually need to come up with something that is able to hold your own mind accountable and keep a discipline in your mind that allows you to execute on this flawlessly again and again. And it's very difficult. It's much, much harder than it sounds, because there's a lot of things going on in your head you're not aware of. And when you engage in low time frame trading, there's a lot of different there's a lot. Yeah, there's a lot of uncertainties that you're subjecting your brain to that it does not like. It does not like it. Do you understand? When you're trading 15-minute time frame or 1 hour on NAS 100 or SPX, your brain does not like it. Like, it hates it. It actually really, really disliking. Like, now you might get confused because sometimes you might get good results and it feels good and it looks good, but you have to understand at the same time, just because that you're getting results doesn't mean that your brain likes it. It doesn't like it. It hates it. Okay. So now you understand that you're putting your own mind in a bad environment that it doesn't like. You also have to understand it kind of builds up like a toxic waste over time, like a bad product. There's a bad product being built inside your mind at the same time as you're doing this, and you are not equipped to handle when this shit unfolds. Just the same way that the Afghanistan government was not equipped to handle the Taliban, you're not fucking equipped to handle this shit when it unfolds. You might delude yourself into the idea that you are, but you're not. And that's where you get hurt. That's where you lose a lot of money that you're not prepared to lose, and then you're in a vicious cycle of trying to get that back, and you're gonna get hurt. Okay.
Let's talk about why this also, why this turns into a toxic waste dump as well, Asger, because I think that's important too. I think people, you can tell them this thing happens, but until they understand it fully or they experience it for themselves, it's kind of like just fluff in their mind. It's like, oh well, I'm different, I can do this type of thing, right? So I think it's important to do this. And why does this happen? Because every time you experience one of these losses where you have that emotional drawdown, you've been in there, Asger, I've been there before. We store this away in our subconscious mind and we hold on to it like a belief, right? And that belief, when we're faced with uncertainty again, and we have like a limbic response, our limbic system fires up when we have uncertainty. what we call our chimp mind, you know, our most primitive mind. It goes into our subconscious, into this supercomputer that is our subconscious, that's completely objective. It doesn't have emotion. It just stores information. Okay, our chimp mind, which is very polarized, goes in there and it finds one of these beliefs. It finds one of these past experiences where you've experienced, you know, heavy loss, and it brings this back out again, and it creates fear. And then this fear you start operating on, and then your chimp mind starts trying to retreat from this fear, because you have to understand that, you know, at your base level as a human being, you're still a guy that's running around in a in a field, you know, running away from a saber-toothed tiger and chasing a deer, okay? And your TPs are the deer that you're chasing and try to spear, and your stop loss is the saber-toothed tiger that you're trying to get away from. And from the perspective of your limbic system, from the perspective of the chemicals that are released in your brain, there is absolutely no difference between the saber-toothed tiger and the stop loss. So when we go and we experience these heavy stop losses, these attacks, we feel like they're attacks on us, we immediately revert back to that fight or flight, and we bring back out from our subconscious mind that past experience of when we've lost, and it was a really difficult loss and we never got over it, we never were able to move on, we were never able to clear it away, and this runs that trade, okay? And we're running away from it, and we just can't make clear decisions here. We can't think with our human mind because we're just running like an animal, running away from the fear. So that's why, you know, our mind turns into this toxic waste dump, as Asger calls it, with every new loss that you have on these low time frames and all this uncertainty that you're experiencing on the lower time frames.
So to sum it up, to avoid this, what you need to understand is that when we're trading low time frames like NAS 100, and you're trying to get it, you're trying to get your bread. When we're doing this, you have to understand, for a very long amount of time doing this, you're going to learn so much, and you're going to become an incredible trader over time. But it takes time, and it's really important that you can last throughout all that time it's going to take you to get to the finish line. And the only way to get there, the only way to do that without ruining yourself on the way, like without making your life miserable and going into debt or trading for friends or family or something worse, right? There's a million times it could end up worse for you. The only way to do that is by doing it realistically on a demo account, and just continue to treat it like a professional account. Okay, treat it like a professional account and just continue to trade it. And then understand that whenever you do deposit real money, yes, you have a chance to make a lot of money, you have a chance to learn a lot, but in the end, you are really stacked against yourself here, and it's not going to be easy. Okay, let's continue in the questions, Tom.
Yeah, for sure. To answer your question though, the best time frame to trade is the one that you can survive on the longest, Samuel. And that's most likely not the low time frames. So to sum all that up, Euro, pound, daily short setup. Your thoughts? 1 day short setup from here. I'm guessing it's not a strategy mode trade. You know, it's a repeated trade, first of all. Like, it's immediately moving back for the repeat in here. I'm guessing you're probably setting up something like this. You know, it might work. It's a reasonable RTD. But again, you know, you've got the repeat here. Yeah, you've got a nice bearish engulfing candle around the level, but I probably would go and look for something else that's not repeated, that's maybe a fresher test before I went and took this trade personally. How about you, Asger?
Well, yeah, I don't like how it traded since April until like now. I just don't like it reminds me of the BTC price action we saw.
Always chop here, yeah.
Well, it's actually very close. It's actually very close. It's just, but it's even more choppy than BTC. It's even more choppy than that. So if I had to take it, it would be I would take it on a lower time frame, and I would spend a lot of time watching the trade, making sure that the price action is interacting with this level in a way that I like. It's just so no, I would not say this is like the best place to I think there's better setups to invest your money in. Honestly, that's how I feel.
Yeah.
Okay, so we had a question about No, that's just a guy. That was just a guy saying you did a great job yesterday on the explaining X mode and RTD. So good job, Tom.
Thank you,
Let's
thank
talk
you.
about let's look at BTC. Yeah, let's have a look at BTC. What is it up to? So I said in the start of the stream, I have like a general idea right now, and I don't know if it's gonna play out now. I'm just watching it, but I have a general idea that the market's there's gonna be like a macro downturn, just a pullback, just a sell-off, but just an excuse to print more money from the Federal Reserve, really. And I think I'm betting on them printing more money, but they need good excuses. I think they need an excuse here. I also think BTC looks pretty top tier. I would not be surprised to see it test 50K from here and then roll over and just consolidate more, and then it just becomes a fucking massive range. Like Tom, if you put a horizontal line at the 29K bottom and then the yeah, somewhere around there, yeah, that's fine, right? And then the top,
Up here, or you mean here?
well, it could be both, really. you
Let's put it
you
at
can
50K, huh?
yeah. And I think there's a very good chance this is just going to start ranging between this, and it's going to be boring for the next 8 weeks. And then I think like into the end of the year, it's probably going to start getting sexy again. I might be wrong.
Yeah.
If it now, I will change. I'll tell you how fast I can change my mind about this. If this hits 50K, and it immediately goes higher than 50K, and it starts consolidating at this level, and it's not really going below 50K again, then I will tell you my mind changes very fast. And I'll tell you, I think it has a very good chance of going to 75K or even 100K this year. But just from what I'm seeing right now, I would have expected to see a little bit more power through that 50K level by now. I'm not, so I think there's a good chance it's going to reject off this level and just consolidate. It doesn't mean it's going to go to zero or anything. It's just gonna consolidate a little bit more. Because I saw how a lot of people, they went from like I don't know, a couple of weeks ago they were all talking about Bitcoin going to $10,000 and like the world was over and it was a scam and whatever, the classic shit, and people lost thousands of dollars, not millions. And now we got the same shit again. I've seen people put $150,000 into a JPEG, like a picture on the internet. Like they're just buying stupid shit. It's like there's too much money, it's too much euphoria. But this phase can last quite some time before it turns. So that's why I'm saying I don't think we're gonna get any big moves like right here and right now. Maybe we're gonna test 50K, but I think it's gonna consolidate and it's just gonna churn. It's just gonna churn people again, meaning those people who made money, they now have to lose it because they're not disciplined. And that's what market does to them over time. It takes the money that they made and it takes it back from them. That's what happens to people typically.
Yeah, for sure. Someone's saying, is there a possibility to post TP with trailing so we can get more out of the market? No.
Well, the reason we don't use trailing stop, I'll explain this. The reason we don't use trailing stop is in general that markets they like there's so many different algorithms out there that takes advantage of this, because all it takes is like a big whiplash in the market, meaning a big action forward, a quick wick, a quick reaction in the market, and you're out of your trade. And I don't like that. That's not how I trade. Instead of thinking that because of the market touches a specific point at a specific point in time, the trade. So I think it's a stupid idea, unless that is your stop loss. And the only reason that we do this for your stop loss, meaning that whenever it touches your stop loss, you're out. The reason we do this, let me just explain this so people don't get confused. The reason we do this and we don't move our stop loss and we don't take it out temporarily and we don't have a mental stop loss, meaning that when the price touches this, then we're supposed to close the trade. The reason we don't do all this shit is because no one has figured out at this point whether when the price touches specific point, meaning like your stop loss, no one has figured out at this point whether that reaction is going to turn into a 50% drawdown candle or it's just going to bounce off it. No one has figured out yet, but you simply cannot allow yourself to be in a position as a trader where you get wiped out because you move your stop loss or because you take it off. You cannot do it. And for that reason, we have hard stops. It touched the stop loss, we are out. No matter if it's fair game or not, that's just the rules. Those are the rules of the game. And the reason we don't want to subject ourselves any more to this than necessary. So the reason we don't use trailing stops is because, as you can see in these markets, there's a massive amount of volatility. So using a trailing stop, I think, is a bad idea. Watching your trade and watching how price action interacts with the level as it progresses. Like we can look at Bitcoin here right now. You can see that it has a level below it. Like if we were in a long position right now on BTC USD and it was a 1 day setup trade and we were long here, well, basically it would be much more rational to say, hey, if the daily closes below that 43,750 level, if that's the case, then I will get out of my trade. That's a much better trailing stop than having like an automated stop like that. It's not a good idea.
So this chap is saying, Attila is saying, I'm talking about a trailing TP, not a stop loss.
I don't know what a trailing TP is.
There's no such thing as a trailing TP. The nature of a TP, if you're in a long position, is that it's above where the current price is, right? You can't. It's not how it works.
No,
if it's trailing, then it's a stop loss. if it's trailing, it's a stop loss. Yeah. So, yeah. What do we got? Do you guys usually trade currencies? Yeah, for sure, absolutely. Cryptocurrencies are great. How does your daily routine of looking for X mode setups usually look like? Going through watch list 1 day, 4 hour, and 1 hour timeframes. That's what I do, but curious how experts approach it. I usually look at the sonar, personally. I'm usually looking at sonar. Like I you know, like I said in our coaching call yesterday, right? In our group coaching session, people make this distinction between X mode and sonar, but forget that X mode is the backbone of sonar and the backbone of the strategy in general. So if I can find a great sonar setup, why would I go and expend all this extra mental effort to, you know, create out of thin air an X mode setup when I've got a really great sonar setup then? So usually what I do is I'm just like looking through sonar regularly. I'm just looking through 4 hour, 1 day. I'm seeing what's there. If I see a really nice trend, then I'll go and I'll take a look at that one and I'll place that one. If I see that, you know, I'm looking across US dollar, for example, I see pound US dollar, Aussie US dollar, all these things with US dollar strength, right? I'm going, oh, well, shit, you know, there's got to be a market here where the US dollar is just particularly strong against against some pair, right? Whether it's gold, whether it's Aussie dollar, whether it's Singapore dollar, whatever it is, I'm just going, there's got to be a market here where the US dollar is looking really strong and then whatever it's against is looking incredibly weak, and this is creating for me a really great looking up or down trend. And then I just go trade in that market right there, you know? I'm kind of just mindful of what is showing up here. Like right now, I can immediately see we've got a few Japanese yen pairs, US dollar. So I'm kind of thinking like, all right, well, Japanese yen, oh, there's another Japanese yen. Japanese yen is looking relatively strong compared to a few different currencies here. So Japanese yen is kind of looking strong at the moment. Probably going to be able to find a trade somewhere with the Japanese yen pair. You know, and then I'm just going to find the strongest one, objectively the strongest one, go look for a great level and set up some orders to buy it. Or, you know, I've got my, you know, S&P 500 that I go to, Bitcoin that I go to, which I just kind of check on a daily basis anyway. But, you know, when you look at this, you can see these correlations in the sonar and see, oh, well, shit, it looks like Japanese yen is trending at the moment, you know?
Mm-hmm. Let's have a look at, we also talked about AUD in the last stream, and I said they look super weak. I don't know, but it looked super weak last time I had a look. Mm-hmm. Let's have a look at the Aussie dollar.
Let's take a look. Looks like we got a 4 hour and a 1 day trade on the Aussie dollar here, on the Aussie dollar Japanese yen. Okay, yeah. Aussie dollar is looking particularly weak. Let's look at the 4 hour setup.
That's very aggressive, but okay, let's have a look. Let's have a look at it. I mean, it's not too bad. It's not too bad, but you got to realize like kind of what's going on here.
You know, this march to the downside obviously looks very bearish, but this is an incredibly aggressive entry, right? Incredibly aggressive entry. I could very
Yeah, but
easily see this. It's forming a bear flag, right? Below the level.
Yeah, yeah, it is. The only thing I would change here, I would move the stop loss a little bit higher than that resistance level, like just a tiny bit higher than what we actually have. Yeah, right there. That's where I would put the stop loss instead of where it is. But actually, like when we're talking about like certain stuff, so I don't think this is a bad setup. I think it's gonna work out. I think this trade will work out just fine, just because of how fucking shitty the Aussie dollar have been. I'm just kidding, Tom. But yeah, it is an aggressive setup. But at the same time, it's done right. And if you look at the price, Tom, do me a put a horizontal line at that structure to the left, that wick that was, no, the lowest wick, yeah, yeah, horizontal line would have been better, but this is fine. I'll take your, I'll take it.
Okay. Here we go. There we go. Good. Horizontal line.
Okay. So this is a setup that you're gonna get into, and you can get into, and you will have a pretty good chance of getting out of this trade if it turns into, like, if it starts consolidating above the entry, meaning that neutral level where we're really making the entry. Like, what's gonna matter here is whether you are able to confidently read the price action of what it's going to do. But I don't think it looks bad. I think this is a reasonable entry. I think this is a reasonable trade. I think it's going to work out. And I mean, depending on how exactly and when this trade showed up, it might actually already have worked out.
Most likely, yeah. This candle right here, huh?
Yeah, exactly.
That candle right
we don't know the order of that. We will be able to see it if we go to 1 hour, but we don't know the order of how that trade played out.
Someone's asking about, we've got obviously Aussie dollar Japanese yen on the 4 hour and also Aussie dollar Japanese yen on the 1 day as well. So how to approach this situation here?
Well, these are two independent trades. It's entirely possible that they will both be profitable. It's also entirely possible they will both lose. It's also possible one will lose and one will win. The 4 hour trade is very different from this 1 day trade. Like these are two very different trades. Okay, you cannot treat them really the same. The 4 hour, like I said, it really requires you to check in on your trade much more often, because it's in the action area right now. And it's a very aggressive trade, meaning that you gotta watch it. You need to take care of that. You need to look. Does it start consolidating above the entry, or does it stay below? Does it, like you would really have to watch, like, a 15-minute time frame, 1 hour time frame. Just watch how the market is behaving, right? That's what's required of you to trade 4 hour. On 1 day time frame, you can put this trade and you can basically put it and forget about it. You don't have to touch it really. Like you really, even if it goes into drawdown, it's a very safe trade. It's a really good trade if you get this 1 day AUD JPY. If I had to rate them, I would give the AUD JPY like a score of, I don't know, 8.5, whereas I would give the 4 hour trade something like 6.5 or 7 out of 10 points. And that's just the nature of it. And that's, of course, entirely subjective to me and how I see these markets. Let's continue on. Someone is asking us to look at Ripple.
Oh, Ripple. Sure, you love looking at Ripple, mate.
It's been a while, someone asked, because I scared them all away. What is this fucking shitcoin doing? How is it trading?
Well, I mean,
the stop loss is in negative.
Yeah. Okay, so I think that this if this position is something you want to get into, that's probably the trade right there.
Yeah, I think this is. I think I think this trade is a little bit overextended.
Yeah.
That would be the trade, and I also think that by the time that it comes down, it will correct to this as well. It should. It
Yeah,
should.
yeah. The algo recalculate. Uh, yeah, once the range gets filled back in here or something like that.
I will just say, as in terms of like crypto investments and so on, that what you should know. Like, I don't care that much about fundamentals of the assets that I trade, but I do care about the fundamentals of XRP. What you should know is that for nearly, I think it's nearly 8 years now, this company has been selling their coin as a share to unknowingly investors for years. They've been selling I think it was like $1 billion like a month, offloading this directly in the market to people just to buy us, just to keep the company afloat. Like we're talking about cryptocurrencies. This actually has nothing to do with cryptocurrency. This is basically a scam. Okay, so if you want to be involved in cryptocurrency, now listen, I've been involved in cryptocurrency since 2010. Like I was very early looking at crypto, but I just want to tell you, like I am very familiar with a lot of cryptocurrencies and how they work and what they can do for people. But this is a scam. This market, okay? That doesn't mean it can't pump, because if there's one thing you have to learn, if there's one fundamental law of pump and dumps in crypto, it's that the scams, the shit, the absolutely biggest dumpster coin of shit pumps the most. But it only pumps and then it dumps. It's not going to retain its value. This has been shit ever since it was launched. It's a fraud. Don't buy this. If you want to be investing in cryptocurrency, buy a little bit of Ethereum, buy a little bit of Bitcoin. There you go. That's all you have to do. You'll literally be rich in 5 years. Don't buy this shit. This is literally trash. Don't ever mention XRP to me again. Sorry. Go on, Tom.
So Fran is saying, Tom, you said something about TPs, like setting them so the market doesn't have to work too hard, and that really made sense to me. Can you talk more about this? So Fran is talking about in the group. Fran's one of the funded traders in our group session yesterday. I was talking about X mode and, setting appropriate TPs or setting appropriate stop losses based on X mode levels, right? And I mentioned something like, don't set your TPs where the market has to work incredibly hard to get there. This is a good example of setting a TP where the market has to work so hard to get there. It's like, can it get up to this level? Sure, yeah. Is it more likely to get, to this level here and then maybe be rejected or something like that? Yes, much more likely. So this is like a TP level where it's like the market doesn't have to work as hard to get to it. It's a much more reasonable TP. Okay, something like that right there. And that's why it's very likely the algo is going to recalculate to that level. And you can see here, we've got our stop loss in a really ideal place where it's like, if that breaks, if that extension 2 breaks, this thing's going to zero, right? Like it's
it will go where it belongs.
It will go where it belongs. Yeah, exactly right. So this is a very good example of being able to turn on X mode and know what you're looking at to go, oh, hey, this isn't the trade. This is the trade.
The reason, there's a guy asking why I'm so metal when it comes to XRP. Well, the reason is because I had for years discussions with many people who absolutely believed that this was the future of them, like this was the best investment they could make in their life, and they just don't understand the reality of what this company does, how it exists. That it's not really a cryptocurrency. Like it doesn't share any of the properties of. It's not even a blockchain. Do you understand? This is a MySQL database. It's like it's a fraud. It really is, and they have been dumping. The company itself has been creating tokens for years. Dumping this on the market for years, and there's an SEC lawsuit against them where they have publicly admitted that the own company of this coin made operations that pumped and dumped it. Do you understand? Tom, go to XRP USD on Kraken. Actually, yeah? No, sorry, XRP BTC on Kraken, yeah. Yep, and then go to weekly. and then hide everything else. Okay. So do you see what happened over here to the left? This was literally thousands of people getting ruined. Okay. And the people who did this was the company itself behind XRP who claimed this was a cryptocurrency. It's not. It's a scam. It is a literally scam. They are dumping millions of dollars of their own token that they're just creating out of thin air every fucking month. They've been doing it for so long. They publicly admitted in court that they did this. It's really bad. Like, it's really, I don't understand how like they're even standing, because it's so bad. Okay. Beside this, cryptocurrencies are great. It's just this specific one. It's like you can compare it to like BitConnect. Have you ever heard about BitConnect? Yeah, it also pumped from 0 to 500. But where is it today? It's at 0. And there's thousands of people who lost their money. And I've been telling people for years about this. And instead of investing in real cryptocurrency, they get duped. Like, they get people make them believe that this is a cryptocurrency when it's not. And that's where they end up get hurt. While all these people on the left side who has been hurt for years, they could just have bought a little bit of BTC, a little bit of Ethereum. They would literally have been rich, but instead this was stolen from them. So that's why I feel so strongly about this, because I've seen this happen to so many of my friends, and they now know better, but they didn't know better back then. It's such a shame. Yeah, SafeMoon was a scam as well. So that's why I'm saying, stop buying these shit coins. Stop trying to buy these lottery coupons in cryptocurrencies.
Yeah,
okay?
It's the lottery mindset.
Get real about this. All you have to do, and even if you think Bitcoin is at a high price and you think Ethereum is a high price, it is nothing, because you don't understand that this is literally gonna explode to another level that you can't even comprehend it. Like, this is gonna go so high. But if you invest in something that's not a real cryptocurrency, that has an SEC lawsuit and all this, you're not gonna make it. So all you gotta do is buy a bit of Ethereum, just buy what you can, and you'll be much better off in the future. Okay?
Yeah, for sure. All right, Asger. Before we finish the stream, right, we have the Kill a Clown for this month that we need to announce the winners. We need to announce the winners of Kill a Clown.
Speaking of scams, go on.
Speaking of scams, exactly. Speaking of scams. So for all of you new traders out there, anyone who's watching this stream, if you're rewatching it, whatever, we had a scammer problem, right, in our community, where people were coming in under facades of, wanting to learn about BFT, and then going and direct messaging our community members, our very loyal members of Breakfree Trading, and new people as well, telling them all this bullshit, trying to scam them out of money, get them to send them, money, and they'll double it in a day, and all this kind of bullshit, right? So what we did is we took action against these people, and we created a program called Kill a Clown, the clowns being the scammers. And Kill a Clown is basically an idea that Breakfree Trading members can go and waste the time of one of these clowns, these scammers, and then we'll basically pay them. We'll pay them to waste the time of scammers. And if they just submit, screenshots, videos of all of the messages between them and a scammer, showing us how much they wasted their time, then we'll pay them. And this month we have 5 winners of the Kill a Clown for the month, okay? Each one of these winners are going to get $100 from Breakfree Trading as a token of our appreciation of wasting these scammers' time, and hopefully they rethink their life, right? Rethink their life in terms of what they're doing and how, just toxic it is and evil it is that they're doing these things to people. All right. So $100 to each one of these 5 people. I'm going to announce who they are. We've got Inder. So Inder Sodi is the name in Telegram. We've got Cephas Author. We've got Eulus Olivo. We've got 1, 2, 3, 4 Jason, JJ Rays, and we've got Dixon. So these are our top 5 message strings basically that were submitted, and they are the top 5. They're going to be the winners of $100. So Dr. IQ, Dr. IQ in the chats. I'm sure you know him. He will message you. Congrats everybody. Well done to those winners.
Yeah, so we're gonna do this again next month. So that means that if you want to make $100, it's really simple. Okay, it's really simple. If you want to make $100, all you gotta do is join the global chat a little bit around, and then wait for one of these idiots to message you like, oh, hey, are you new to investing? Or hey, do you want to learn about like ultimate investing, blah, 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 whatever it is. Whenever one of these guys message you, all you have to do is just waste his time for as long and as creatively as you can. And then we will literally pay you $100 to do that. And that is really like, yeah, it's a cost of doing business. It's a way that we're protecting our members. I can tell you, just from knowing these guys and having spoken to the scammers behind it doing this, I can tell you they fucking hate it. So we're gonna keep doing it.
Yeah, for sure, for sure. And you know, be creative. We love seeing like just creative, crazy messages, you know, to these people. It's so funny. It's so funny that they're just kind of like they continue on, and then there's a point where they just like they get angry, and it's like if you make a scammer angry, it's like you've done well. You've done well. So well done, guys. The winners for this month. We'll continue it into next month. So everyone new who's joining BFT, make sure that if you get messaged by a scammer, don't let them off the hook. Waste their time like crazy. All right, guys. Alrighty, Asger. Well, I've got nothing else to say. Hit the like button before you leave, everybody. It's been a pleasure, Asger. Thank you so much, mate.
See you guys around, everyone. Thank you for coming. Bye-bye.
Cheers, guys. See you later. Bye-bye.